Welcome back. In the news section of the flatex Degiro Group website, on the 18th of November, was published a press release containing some news. The link to the press release is in the description of the video. With the press release, Degiro announced an imminent radical change in its fee structure. The following day, Degiro sent an email to its customer to clarify the changes in detail. Some changes have taken effect from Monday, November 22. The rest of the changes will take effect starting from Monday, 20 of December. Degiro operates in 18 European countries and the fee changes are not the same for all the cultures. In this video we will discuss the new fee structure for the countries defined in the press release as being growth countries. These are France, Spain, Portugal, Italy, Sweden and Denmark. Let's see what has changed. We start with the changes that took effect on the 22nd of November. First, elimination of the transaction fees for trading stocks on the New York Stock Exchange, Nasdaq and the Toronto Stock Exchange. This is fantastic. Does that mean that we can trade US and Canadian stocks without paying any costs? Well, not really. What does Degiro mean when it says zero commission? Degiro with this expression indicates that it will not gain anything from executing our transaction on the US and Canadian markets. However, the execution of our orders on these markets involve costs for Degiro. Some of these costs are, for example, settlement costs, liquidation costs, regulatory costs, etc. Degiro will pass these external costs on to customers through the imposition of a fixed commission of 50 eurocents. To clarify the situation further, let's see from the investor perspective how the cost of investing in US shares have changed. Prior to the change, for trading US stock, we were paying a commission of 50 eurocents plus $0.004 per share. After the change, we will pay a fixed commission of just 50 eurocents. With regards to Canadian stock, before the change we were paying a commission of €2 plus $0.01 Canadian dollar per share. After the change, we will pay a fixed commission of just 50 eurocents. Not bad, right? The elimination of the variable commission of 4 thousandths of dollar per share may seem insignificant at first glance. In reality, it is very significant if we do transaction in US shares with low stock prices. Moreover, in the old price structure, the US transaction fee had no ceiling. Let's move now to the second change. The zero commission policy is applied to all domestic stock exchanges, Euronext Paris for French investors, Bolsa de Madrid for Spanish clients, and so on. Here too, we use the same line of thought that we used for US and Canadian shares. Degiro will not gain anything from the execution of our transaction on domestic shares, but will pass the external costs on us through the imposition of the fixed commission of 50 eurocents. Let's see now the third and last change. Elimination of the transaction fees for all ETFs on any stock exchange except for Tradegate. Here the situation is slightly more complex because we need also to distinguish between the ETF included in the promotion and the ETF excluded. Let's see what are these changes from the point of view of the investor. If we meet the condition of the ETF promotion, the transaction cost will be zero for us, as before. In this case, there is no transfer of external costs to the investor. No change regarding the ETF traded on Tradegate. Instead, for the ETF excluded from the promotion, things get interesting. If we previously paid €2 plus 0.03% of the order amount. Now we only pay the fixed commission of 50 eurocents as a reimbursement of the external costs. We believe this change makes Degiro the perfect broker to carry out a capital accumulation plan. As always, we emphasize that the reduction of fees is crucial for a long-term strategy such a capital accumulation plan. These changes are the ones that took effect on the 22nd of November. Now let's dive in the changes that will take effect on the 20th of December. Reduction of the transaction fees on Australia, Hong Kong, Japan and Singapore shares from €10 plus 0.06% of the order amount to a fixed transaction fee of €5. Reduction and harmonization of the transaction fees on shares of other countries to a fixed transaction fee of €3.90. Reduction and harmonization of the transaction fees on bonds from Belgium, France, Germany, Holland, Portugal to a fixed transaction fee of €2. Regarding option and futures, the exercise and assignment costs have not changed, always €1 for each contract. The transaction fees, on the other hand, have been reduced and harmonized. In general, Degiro therefore reduced the transaction fees. But is it all roses and flowers? As usual, no. Degiro decided to increase the cost associated with currency exchange and the cost for borrowing money. The cost of currency exchange will go from 0.1% to 0.25% for the auto FX mode. The manual setting will move from €10 plus 0.02% of the converted amount to €10 plus 0.25% of the converted amount. This increase in the manual setting makes little sense to us. Now the auto FX will always be cheaper. With regards to the cost of borrowing money, in the case of allocation, the annual rate has changed from 1.25 plus Ionia rate to a fixed rate of 3%. This as well is a dramatic increase that will lead us to reconsider our financial planning in case we were using allocation. These increases in the cost of currency exchange and borrowing are significant to the point of making Degiro, in specific situation, more expensive than some competitors. With these changes, Degiro becomes less competitive for trading on foreign products than before. On the other hand, if we trade European stocks without using borrowed money, Degiro remains, without any doubts, the cheapest broker on the market. As to clients who simply want to build a capital accumulation plan, we believe that there isn't a better broker than Degiro on the market. We hope this video was useful. Please subscribe and like. See you next time.